You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for a little show we like to call around these parts, the Crypto Rundown, the program where we break down everything going on the crypto side of the fence. We're going to talk some Bitcoin, some ETH, a little bit of XRP, and everything else going on under the sun in the world of crypto, derivatives, the futures, the options, the spot, the vol, the volume, the SKEW, the open interest, all that good stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Remember, keep those reviews coming if you like what you hear out here. Also, if you have questions, hit us up on our platforms of choice. And again, keep those comments, keep those reviews coming wherever you listen to the program. Could be Apple Podcasts, Spotify, Google Podcasts. We don't judge. YouTube, our app, way more people can continue to discover not just the program, but indeed the network. And speaking of the network, let's get to it. It's time to break down a little bit of the old Bitcoin.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody. Like the man said, it is time to break down the world's most dominant digital asset. Yes, it is time to talk all things Bitcoin, and another interesting week of not quite as much of a big net mover week on week as we have seen the last couple of weeks. Bitcoin, though, ticking back up, so all you bulls can take a bit of a sigh of relief. Coming into showtime, we were threatening 10,900, about 10,885 or so coming into showtime. Puts it up not quite 200 handles, but pretty close, about 193 from where we were this time last week. Remember, most of our analytics here coming at you courtesy of our friends over there in SKEW land. Check them out, SKEW.com. Kick the tires and light the fires for yourself over there. The realized vol, a.k.a. looking back, the historical vol of the last 30 days. How much volatility Bitcoin has actually exhibited in the marketplace. That's down quite a bit. Remember, as this frame of reference rolls along, it has now incorporated more days from the last few weeks where we did see a little bit of quiet out there on the Bitcoin front. So that realized vol is down dramatically. It was almost 60% on our last show with 57%. Now it's down to about 36%. So impressive how much that has come in over the last week or so. 30-day implied, though, this is how much vol the markets are pricing in going forward. That's moving the other way. That's ticking up. That was about 45%, which is fairly low in and of itself for Bitcoin looking back historically. I think we topped out this past year at about a 72%, and it's been hovering usually in the 50s and not the 60s for the better part of the year. It got up this week again, back up to about 52%. So after a quiet period, 45% to the dark side. Now ticking back up to the light side, up to about 52%. Actually, that was pretty much right around our low, or pretty close to it. The low for the year on 1 month implied volatility is 43%. So we're hovering pretty close to it this time last week, listeners. You know, when you're hovering at those lows, something probably going to happen. It's going to probably start ticking up, and that's exactly what we saw. The SKEW also ticking up a little bit more positive, up to about 5.7% from 5.2% this time last week. Heading on out to the open interest. What's going on out there? Of course, we saw a whole mountain of OI come off the tape with September expiration. Again, we talked about it before. That's just the way crypto options like to trade. They like to go out in the quarterlies for whatever reason and establish the size position. So the market's nowhere near coming back from the enormous amount they had out there in September. They got north of $2 billion out there. DERIBIT itself was at about $1.7 billion out there. So pretty high OI. And now, of course, we're well shy of that. You average together all of the major platforms out there. It's at about $1.5 billion, a little bit north of that out there. So still a ways to go to climb back up to the highs of September. But we got some time out there for some paper to start creeping in. In terms of the major platforms, who's leading the dance this week? Let's see. DERIBIT, still the big dog, with about 75% of the open interest out there. Then we got CME number 2 at about 14%. Then we got Bit.com and OKEX fighting it out for number 3, both tied at about 4%. Then LedgerX coming in at 3%, and BAKKT once again at a whopping 0% out there. Let's go out to the big dog, see what kind of paper we saw this week. Overall, a pretty light week from the options perspective out there. On DERIBIT, the high we saw for the week was pretty much $138 million worth of notional. That was back on September 29th. And that was pretty much it. Not much else really to speak of out there. Of course, that doesn't even come close to some of the recent highs we saw out here. We saw $262 million worth of notional going up on DERIBIT back on September 24th, $227 million on September 4th, and even $194 million on the 17th of August. So $138 million doesn't even come on the radar compared to what we've seen out there last week. So a pretty quiet week, all said, out there on the Bitcoin options front on DERIBIT, and that translates into the paper we saw as well. Even though we did see a few size prints out there, most notable were probably these DEES 18,000 calls. Yes, I said that correctly. 18,000 to the upside, going up 500 times. That was on the 30th, listeners, for 0.0152 Bitcoin. That's back when Bitcoin was hovering at 10,741, so a wee bit shy of where it is right now. If you're wondering, by the way, that's about a 72.5 implied volatility out. That's what they're paying for these levels. Same day, we also saw the NOV 18,000 calls going up 250 times. So maybe a bit of a roll out to DEES. Either way, it's rolling on a ratio, 250 by 500. They were done about the same day and about exactly the same time. So if it looks like a duck and it quacks like a duck, probably related paper, or maybe just an interesting ratio time spread. The NOV, by the way, went up at 0.0086 Bitcoin when Bitcoin was 10,736. So pretty close to the other one. And also a little bit higher vol there, 78 and about 0.5% out there implied vol. So that's one of the more interesting prints we saw going up out there. I should take that back. There was another leg to that as well. It was a NOV 16,000 as well for 125. So now if you're playing along, it was the NOV 16,000, 18,000 vertical going up 125 by 250 times against 500 of the DEES 18,000s, all on September 30th out there. Interesting stuff. The NOV going up for 0.0113 Bitcoin, or about 68.5 vol out there. One of the larger prints, everything else kind of smaller, 100 lots, 125 lots, and much smaller than that out there. Big trades today, not even really worth parsing out there. The biggest, most active contract are the NOV 13,000s on DERIBIT with about 332 lighting up the tape. So not a lot going on out there. Let's look at the months and see what's lighting it up out there. Remember, September was the big dog. Quarterlies are usually the big dog, so we expect DEES to be in the driver's seat, and that is the case, but only ever so slightly, which is kind of interesting. Last show, December had about 35,000 contracts open. So we've seen it tick up, but only ever so slightly since last week. Only about 2,000 contracts more on the tape from an OI perspective in DEES. In fact, it's October that has exploded almost into the forefront here with about 35,500 contracts. That's coming on strong. It's pretty much poised to topple December now, which is very surprising. Usually, again, it's the quarterlies where all the action is. So we'll see if this time next week if October can lead the dance. Right now, it's neck and neck with December and October. Also, March coming on strong, going back out to the quarterlies with about 21,300 contracts open. Not much love for November out here so far. It's all DEES. And it's all OCK, and then it's out to March. Jan and Feb, not even on the board yet. So another reason why folks like the quarterlies out here. But interesting to see October. Maybe some of that election-driven. Obviously, there's a lot of vol being priced in the near term here. Maybe that's driving a little bit of paper into the nearer term contract. Either way, October and December now vying for the lead out here in Bitcoin options land. In terms of which strike is leading the dance, it was 12,000 until this week pretty much. Now it seems like a new strike has fought its way into the top ever so slightly. It's kind of almost a three-way tie for number one, but just edging out the other two. We've got the 10,000 strike, so perhaps showing how the focus has maybe shifted a little bit to the downside again here in these last couple of weeks, because 10,000 was distant in the rearview mirror behind 12,000 a couple of weeks ago. Now, number one with about 11,400 contracts open, followed by number two, the 9,000 strike. So the downside coming into stark relief here this week with about 11,200 contracts, followed by number three, back up to 12,000 with 10,900. So all pretty much within spitting distance, but interesting to see that the 9,000 and 10,000 strikes have now surged into the front in that race. Let's see what's going on out there on CME land from a Bitcoin perspective. A pretty light week out there as well, kind of a light week across the board. We saw a recent high out there in terms of notional for about 34 million worth of notional on September 14th. Nothing really close to that this week. The most active day was on Thursday with about 9.7 million worth of notional. That translates to 182 contracts. Remember, it's a 5x contract out there, but still pretty light volume out there. Same deal pretty much for the futures. A decent volume week, but nothing to write home about. The biggest day was on the 1st with about 13,000 contracts on the tape out there, pretty close to it. Let's go see what our friend the BAKKT volume bot has to say about all things going up in BAKKT land. They were closing in on 3,000 contracts, 29.96. That puts them down 56% from their volume. Their OI also down a little bit. Their OI down to about 12.6 million. That's down about 4% from this time last show. Unfortunately, not a lot of options to talk about out there in BAKKT land, as we all know, as we keep on rolling right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, you know the drill. Time to break down the top 10 leading crypto assets out there in terms of market cap. Take these overall numbers with a grain of salt, but the rankings probably have some value. Number 10, Bitcoin SV. Just about $3 billion exactly from an overall market cap perspective. Crypto.com coin, a little bit north, $3.05 billion out there. Number 8, Chainlink, falling off a little bit. It was a little higher of late. $3.3 billion out there. Number 7, Polkadot, $3.5 billion out there. Number 6, Bitcoin Cash, a little bit north of $4 billion, almost 4.1. Binance Coin, same deal, a little bit north of $4 billion as well. Just edging out Bitcoin Cash ever so barely. Number 4, XRP, oh how the mighty have fallen, $11.2 billion out there. Tether, number 3, $15.6 billion. Number 2, you know what it is, it's ETH at about 39, almost 40 billion. Number 1 with a bullet, Bitcoin, taking a bit of a break though, back below the 200B level this week, 197 billion out there in Bitcoin Cash. Let's go on out now to the number 2 overall crypto in terms of market cap as well as in terms of options interest. That is, of course, ETH. Coming into today's show, we saw another little bit of a, shall we say, a retreat out there in ETH land at about 350, almost even coming into showtime. That puts it down about 14 handles and change from where it was this time last show. Let's go on out to the vol landscape, see what's lighting it up. 30-day realized, that's down quite a bit actually. Same deal as Bitcoin. We're seeing the frame of reference moving, and when that moves ahead a week, we saw a pretty quiet period in there over the course of the past month. That's being reflected in that 30-day realized or historical volatility. You can call it either way. They're interchangeable terms out there. That's down to 88% from 112% last week. 30-day implied, pretty much unched. It was about 61% last week. This week, 62%, but not a heck of a lot of change out there. Still staying fairly frothy and a significant premium to Bitcoin volatility out there, which is kind of interesting. Overall, same story from a volume perspective as you saw in Bitcoin this week. Kind of a light week. The biggest day in terms of notional out there on DERIBIT, 32 million worth of options going up on the 2nd. That falls pretty far behind some of the recent highs we've seen out there, like September 21st, we saw 45 million worth of notional. On the 17th, we saw 39 million. So this past week, pretty far below all of that. Also, in terms of net OI, ETH is still waiting to catch up from the highs it saw not too long ago before September expiration. We're still waiting to catch back up. Over $500 million was open out there, waiting to see if ETH can catch back up out there. But so far, has a little bit of a ways to go to climb back up. Ripple, though, climbing up ever so slightly. from this time last show. Last show was about, 24.5 cents. Now it's about 24.8 cents. So ticking in the right direction if you're an XRP bull, but not exactly perhaps the huge move you were hoping for out there. Bitcoin Cash and Bitcoin SV both taking a break this week. Bitcoin Cash down 11, almost 12 handles from last show. And Bitcoin SV, similar levels, about 11.5 handles from last show. Now it's time to see what you guys have on the brain with a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. This week's crypto question comes in from Camille. Camille wants to know, what's more important when analyzing crypto volatility, the historical volatility or the implied? Thank you. An interesting question, a highly subjective question, and also they're kind of hard to really differentiate. At the end of the day, they're both two sides of the same coin. You can't really have one without the other. You can't really have a meaningful measure of implied, or a prognostication for implied, really, if you don't know what the realized volatility is. They kind of go hand in hand. So you have to look back and see what the product has delivered historically, and that gives you at least some frame of reference for where you can expect, what ballpark you can expect that volatility to be in. And, of course, you have to look ahead, see what events are coming down the road, start pricing those in. That could cause you to differentiate from the historical levels, but at least you have that baseline there. In fact, in most products you normally trade in the options landscape, probably your equity options, your index options, there's what's known as the risk premium. That is the level of implied volatility, how much higher it is, how much it is above the realized volatility. And that happens for a lot of reasons. I talked about this on the show before. Implied volatility is pretty much the market's best guess of where volatility is going to be over the next month. So you know when you guess, you don't know for sure unless you have a crystal ball, in which case I would like to talk to you after the show. But if you don't have that crystal ball, then you need to give yourself a little bit of wiggle room, a little bit of fudge factor. And that's why implied vol is usually a little bit higher than realized, because you need to break down and give yourself a little bit of room for the unknowns to creep in there. Of course, the times when there is that inversion, when implied vol dips below realized vol, that is something that's interesting and worthy of note, and perhaps a time you might want to consider trading, or perhaps if you have big positions on, maybe curtailing them a little bit because maybe something funky is going on out there. But it's not usually the case out there, which makes it worthy of note. So it's kind of hard, Camille, to say one is more important than the other. I guess technically, if you have to go by the letter of the law, the implied volatility is what you are actually trading. You're not really trading realized volatility. So from that perspective, implied probably has to take the top spot out there. If you go out and buy an ETH option or a Bitcoin option or any option right now, that's what you're paying. You're paying the implied volatility. You can't say, well, the realized is only 52%. Why am I paying a 74? It doesn't work that way. You have to pay what the implied is. So in that case, from that perspective, I suppose implied is most interesting and most important, but it's kind of hard to look at one without the other. If you don't have a good frame of reference for what the realized volatility has been in a product, it's hard to really gauge what the levels are for the implied and whether they're accurate or not. In fact, one of the best tools I recommend for people who have similar questions like this, it's a very simple one, a very basic one, is go out and find a volatility cone. And most of your major brokerage platforms, certainly a lot of the good analytical platforms, will provide these for you. And they will show you effectively where the historical ranges are for realized volatility in a particular product over a certain range of time. And it'll show you exactly where you're lining up right now. If your implied vol is, let's say, 2 standard deviations above the historical average for realized volatility, maybe you want to hold off on buying it. And vice versa for if it's 2 standard deviations below, maybe you probably don't want to sell it down there. So that at least gives you some frame of reference for where you're lining up historically, and that could also help you inform your trading going forward. So a little bit of a subjective question there, Camille, but a good one nonetheless. All right, everybody, that music means we come to the end of another crypto quick hit. We enjoy kind of getting these out to you kind of fast, hot, and heavy. Get you in, get you on about with the rest of your trading day out here. We'll be back with longer episodes in the future, but for now, kind of keeping them quick and to the point. If you like what you hear, leave those reviews on your platform of choice so other folks can continue to discover not just a crypto rundown, but everything we do here on the network. It's a whole heck of a lot. If you haven't checked it out yet, you know where to go. TheOptionsInsider.com, or just search for Options Insider on pretty much any major audio outlet, including Amazon Music now adding our content there as well. So yet another outlet for you guys to enjoy our content on. So keep those comments, those questions, those reviews coming. Love to hear from you. We'll see you back here throughout the rest of the week for all of our great programming here on the network And then back again on Monday with more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.